Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, September 11th, 2015. Hope you had a decent week in the markets here. The equities did rally this week. We saw the S&P 500 gain 2.5%, Nasdaq 3.3%, biotechs bounced back 5%. So we're seeing some buying, obviously, in this market. Oil pulled back a little bit, but the question is, do we trust this? And if we do, then what's our game plan? Personally, I do not trust this. We've still got this prior band of support over here that it looms as potential resistance just overhead, just into that 199 to 200 level, basically. And we've got a declining 20, 50, 100, 150, and 200-day moving average. Those are not the ingredients that keep a market's rally sustainable. So we still have to look at this market with an eye of suspicion, but still, of course, look at it objectively as possible. When we look at a chart of the last, well, since the August 24th sell-off low, right here, that's we've got the volume-weighted average price on there, and you can see that this week we did hold above that volume-weighted average price for the entire week, which is one good little sign. But realistically, when we take a closer look, we've of course got that 199 to 200 level as potential for continued resistance, and we've got this down here, really 191.5 to 192 really is what I consider this market still to be somewhat, well, not somewhat, but range bound, as we have been for the last 3 weeks while we're in here. But because the primary trend is still lower, it's not something that I would put much faith in that it would be able to hold. Now we can look at another positive, which is that we're above a 5-day moving average, which is rallying as well. Although, just during all this volatility here the last couple weeks, that 5-day moving average has not been as effective as it has been when we're in a trending environment. So realistically, the bigger trend is, I'm sorry, the bigger range is more important than a simple moving average. So next week, we're going to want to see this first level held as support. If we can hold above 194, we continue to consolidate and do some rebuilding of the foundation for this market. But if we break below that, then we've got to go on a high level of defense and think that it's likely we'll test this 190, 192 level. And if that fails to hold, then it is not highly unlikely to see this market back down towards 189, 188, somewhere in that level. So continue to be on your toes and alert for opportunities. There's still, you look at stocks that have done really well in this market or held up at least, like Lululemon, and you can see this stock just got smashed this week. So nothing really, things seem bulletproof for a while, or that they're holding up and showing relative strength, but things can change very quickly, obviously. We've got this company Amarillo, which has been a disaster here for the last month and a half or two. Avon Products, I don't know, we keep getting rumors in this thing, and it's not a big household name, but the point is, to why I mention this stock is because you see these rumors or whatever the news is, and if they've got a declining 50-day moving average, they've got a declining 100, the 150 and 200-day moving average, and a declining 5-day moving average, they are typically not going to hold. I pointed out on Tuesday that GoPro was a stock in a downtrend, and not to be a hero trying to buy it, and someone had pointed out, well, it's a triple bottom, it's so obvious that this is support and it's a great company and all that sort of thing. And I said basically, listen, we're in a downtrend, it's guilty till proven innocent, do what works for you, but there's no way I would buy here. And the stock dropped another 15% in the next couple days after that. I'm not here to prove anyone right or wrong. I'm here to say, have a discipline with your strategy. In stocks and downtrends, you can justify how good the company is to yourself, or what their earnings are going to be, or why they're a takeover candidate. You can convince yourself of anything. But the only thing that pays is price, and the truth is represented in price. Now we have this stock in a continued downtrend, and the people are unnecessarily getting involved in a stock that's in a downtrend, and they're losing money. No different than this piece of garbage Alibaba that's been horrible since it came public, pretty much. And I've been talking negatively about this one all year. Anyways, let's go back to the overall broad market. The Nasdaq remains below a prior level of important support here as well. This prior support has the potential and did offer resistance earlier this week. So that's the negative aspect. And the negative aspect, though, comes on the bigger picture. And when you have a bigger time frame that's negative, it makes you suspicious of every sign of strength on shorter term time frames. So if we look here, the volume weighted average price since that August 24th low, we have down here a little bit further away. So we've got a little bit more cushion in the Nasdaq than we do with the S&P 500, but that's down at about 102.70-ish. And the same kind of thing is true here, that we've got this we've got this little band of resistance here, and we've got this little trend line now. But the bigger, more important level is the prior support down in this area between 101 and 102. We break below that, then same as the Nasdaq, as the S&P, then it's likely we come down towards the upper 90s. So continue to exercise a lot of caution in this market. Be aware of each individual stock and trade the stocks based on their own merits, and risk management obviously is job number one. The Russell 2000 continues to be, we've got a declining 20, 50, 100, 150, 200-day moving average. The longer term trend is still guilty till proven innocent. When we look at a 30-minute time frame, we've got this prior little band of resistance in here just ahead at 116 to 116.75-ish, and this market's still in a downtrend. So we've got this trend line that'll be worth observing. Our first potential level of support next week will be basically what we saw this week in here at about 113.5. We break 113.5, then it's highly likely we head down towards 112. If we head down towards 112, maybe we would get a little bit of a bounce and then look for an opportunity to continue on the short side, because again, we're in a downtrend on this market. The semiconductors are still in a downtrend, of course. This week, though, they got a bounce. It came right up to this little trend line here, which coincides with that declining 50-day moving average and this prior band of support in here. So, you have to ask yourself, after the market comes from 43 up to 52, who on earth is the person that buys up here on this gap higher? It makes no sense. Where has it come from? Again, from 45.5 to 51, and where did it have the potential to go before it was likely to encounter sellers? And that was right where it gapped up into the prior support, which was a declining 50-day moving average. So for the semiconductors, it seems as though maybe some further pullback down towards the volume weighted average price from the August 24th low. And if that fails to hold, then we've got 47.75 to 48 as potential support. And if that fails, then it's likely we begin to unravel in this market once again. In the biotechs, we again had strength here that was good for what was the gain in there? I don't know how that moved, but we had strength of 5% this week, and we've September's turning into a good month for equities so far. But you have to again look at the bigger picture and say we've got a declining 20 and 50-day moving average. We've got a 100-day moving average is declining. The 150 and 200 are still maybe showing that we're undergoing distribution, and this group isn't broken quite yet, not like the other broader market indexes. But when we see that this prior support level is just ahead and we've got that declining 50-day moving average just ahead, you have to ask yourself again, where has it come from? Where does it have the potential to go? If we take a look also at a trend line off the highs, that kind of ties in close to that 360 level. So we want to monitor and say, what are our important levels here? Since the August 24th low, the volume weighted average price is right here at about 340. And we've got a couple levels below us that this right here near that 340 level is a potential support level. If that breaks, then it's likely we head towards 332. The market is fluid, it's dynamic, it's damaged, and we have to be aware of what the potential is. Do you think that it's worth buying above this level to make a little bit of money here potentially? That is the potential for reward worth the risk that you're willing to take here? And if you look at it and say, if there's prior support, if this prior support does in fact act as resistance, if that declining 50-day moving average does act as resistance, our upside is quite limited from here. But if we break down, we could break down real hard. So maybe you're comfortable personally with a stop, close by, or to buy a break like that with a stop close by. Do what's right for your time frame and what is right for you personally in the markets. Don't listen to anyone who tells you what to do. Listen to guidance and say, here's what's possible, here's where it looks likely, what's the risk reward, and stocks and downtrends are guilty till proven innocent. Apple had some recovery, further recovery this week, and if we take a look at the volume weighted average price since the earnings, it's right here. This is a volume weighted average price line. Let's just draw that in again, and you can see the average price since since the earnings is right there. Now, on a positive note, let's talk about since the gap lower, the August 24th low. We've got that VWAP right here at 110. The question is, again, is the potential for reward worth what we perceive as risk here? If it is for you, then you ought to take it. Personally, I look at stocks with a declining 50-day moving average and say, okay, maybe we could trade it for a day or two on the long side if it lines up on intraday timeframes. But I certainly don't want to take a full position, because the greater risk is that this is a much bigger downtrend evolving, and that limits obviously our upside potential. Higher highs and higher lows is what defines an uptrend. Lower highs and lower lows defines a downtrend. Use that as a simple guide to say, what's the trend of this stock, and do I want to try to be smarter than everyone else and buy stocks that are in a downtrend? If you do, good luck. Use your stop and do what works right for you.